Welcome to 2025, the year of the new normal. Over the past 3 months, we have published more than 60 outlooks with our expectations for the year. Many of our big global outlooks are stable for sovereigns, emerging markets, banks, and non-financial companies around the world. And a big part of that is the stabilizing macroeconomic backdrop that we expect in 2025, with growth headed towards trend and central banks cutting rates. For companies, this will support demand for their products and services. Borrower-friendly conditions in leveraged finance markets should lead to a fall in the default rate and spur M&A activity. For banks, it will reduce their asset quality risks. And for governments, steadier growth and financing conditions will provide policymakers with some breathing space after all the volatility of recent years. But these stable outlooks do balance a number of risks. And with public debt high, the room to respond to shocks is limited. And there is plenty to keep an eye on as the year gets underway. We will be closely watching policy choices by the Trump administration for their effect on global trade and growth. For instance, competition between the US and China will shape policies and potentially raise global trade barriers. The US election has also introduced new uncertainties for emerging market sovereigns. That may spur deeper development of domestic debt markets in EMs to provide alternative funding sources. Technology will continue to disrupt business models, with companies investing further in transformational advances like artificial intelligence and blockchain. Data center capacity will grow, generating opportunities for tech and real estate companies, but also utilities and equipment manufacturers. In finance, the rapidly growing private credit market is boosting the liquidity available to companies. But light regulation of that lending limits transparency, and such concerns will only grow as private credit expands into new asset classes and structures, fueled by large stocks of dry powder. Institutions will also edge further into digital finance and the adoption of cryptocurrency, and they will raise more funds in 2025 via the issuance of digital bonds. Falling costs and competition will continue to drive investment in carbon transition, regardless of a likely change in US policy. And transition finance remains a priority for many countries and international bodies like the World Bank. But as with AI, returns on that capital remain highly uncertain. This all means that 2025 will be another busy year of new ideas, new challenges, and new opportunities. We hope you'll gain invaluable insights from our outlooks for this year and beyond.